Oh, yes, Michael Buble. There's some Canadian content right there.
And you know what? The last artist was Canadian too. He was actually a Haligonian.
Is that right?
And you know what? You know what's
Why do you always one-up me?
I don't know. Maybe I'm like the one-up person.
You know what I mean? I had a nice moment there.
Anyway.
Michael Buble.
This one is Todd's pick, if everyone's curious.
It is. It's called Sway. Welcome back to, and I've got a Michael Buble anecdote quickly, but welcome back to Mortgage 101, your guide to homeownership with Clinton Wilkins and myself, Todd Veinotte, right here on News 95.7, which I'm on 7 days this week.
I mean, if I think people are tuning in on Saturday, they know they're tuning in to hear our show.
Oh, yeah, absolutely. Or Sunday. Don't forget about Sunday.
I know.
You seem to discount Sunday.
And Sunday, we're actually on after you probably just heard our friend Nikki Jabor.
Absolutely. Weekend Gardener, which is a great show.
Yeah.
Anyway, Michael Buble, quick anecdote. Back in my early days in news reading, I was not up really on pop culture at the time, and I'm not really to this day. And I read an entertainment story, and it was Michael Buble, and I said Michael Bubble. And never heard the end of it.
So do they call you like Todd Bubble?
No, but I'm serious. People to this day, if I see them in that market, will say, hey, Michael Bubble, I remember that. What do you think?
What
Sheer incompetence. It was great
that on the
display.
radio?
Yes.
Okay.
I said Michael Bubble in my newsread.
In New Brunswick or in Halifax?
It was in New Brunswick.
Okay.
Yeah. Sheer incompetence on pure display.
I mean,
I do that every day on the radio.
Sometimes we just get it wrong. And you know what? I'm not always right. But I think we learn. We learn from our mistakes.
That's true.
And, it is what it is. And I think that, we're always learning.
Yeah.
And I think that's what's also cool about mortgage lending and about real estate. Nothing is necessarily the right answer. Sometimes it's personal opinion, or if it's what's happening in the day, or there is a bit of emotion that's
but you can do the right thing though.
We can,
as a lender,
and we always want to do the right thing.
Right.
But is there always the absolute? This is the only way forward.
Yeah.
No, there's always probably more than one path.
I know that, but there are people in the business, in any business, where you can put somebody on one path and make X amount of dollars, or you could put them on another path and make that amount of dollars. And ethics is important. And I do believe the reason why you and I'm comfortable with this relationship with you doing this is because I believe you're an ethical person. I know you are. And that matters, right? And it truly does. And that really, serves really you well over the years. That's 15 years of this, right?
Yeah, and honestly, there's clients that we declined or we chose not to do the transaction, or we weren't able to do the transaction 15 years ago that are coming back now. And there's clients that maybe even chose that they weren't going to come with us for whatever reason. Maybe it wasn't the right fit at the time. And they call us and they said, you know what? We made the wrong choice. We should have went with you guys. We know that you guys were the better choice, but for whatever pressure or misinformation that they got, they decided they went another direction. Yeah. And they were regretful. But they're like, you know what? Next time we're coming with you. And you know what? That feels good. I think that we try to give the best advice to everyone. And I think that we really do have a vested interest in the success of our customers because we're in the relationship business. I'm not even sure that I really do mortgage lending anymore. I think I do education, and I think I do awareness. And, I think that's more important than the dollars and the cents. Yeah. And I think the dollars and the cents always come, no matter what type of business you have, if you're providing value to the consumer. And that's what we focus on.
Do you ever, I don't want to say report somebody, or do you ever see anything that's clearly incompetent in the business when you have people come across your desk? Is there a way to deal with that through channels?
If we're talking about the F word, we'll call it the F word in this instance. Yeah. We really refer to it as like misrepresentation. And it could be misrepresentation for a variety of different reasons. And sometimes, we refer to it as fraud for shelter, and sometimes it's fraud for profit. And I think we have a very low, instances of fraud here in Halifax and across Atlantic Canada down the South Shore. I think we have very low numbers of fraud, but it still happens. And I think the more and more transactions that we have, and the hotter that the market gets, and really as the prices increase, we've seen more fraud. And usually we're the ones picking it up. We pick it up before the lender or the mortgage insurer. We pick it up because, the reason that we do is because we're doing so many transactions and we know what's right, wrong, and different. Mm-hmm. And here's an example. Sometimes it's very innocent misrepresentations, i.e., I'm buying this property as owner occupied, but it's actually going to be a rental.
Right.
Or I'm buying this property as a rental and it's actually going to be owner occupied. Obviously, that makes a difference. And maybe you just want a lower rate, or maybe you wouldn't qualify the other way. And, there's 50 shades of gray in mortgage lending, but there's certainly some very blatant misrepresentation. And sometimes that really even comes down to the documents that we get. And, we're really experts at looking at these documents. And we are the safeguard, really, for a part of this Canadian banking system, which is very, very regulated. Mm-hmm. And we want to ensure that the lenders are protected, but we also want to ensure the consumer is protected. We want to make sure the consumer is not going to get in and over their head, because that's not good for anyone. And it's certainly not good for the customer at the end of the day. As much as they may want it, we need to also make sure that they can afford it, and that they can afford it based on things like the stress test. I mean, they can afford it over the long run. It's not just about getting in the house and everything's going to work out magically.
I would think that with the prices skyrocketing the way that they are, I know it's 5% for a first-time home buyer, but it must be becoming increasingly difficult for people to scrape together closing costs and 5%. Are you seeing people who would qualify but just can't pull together that
Yeah, I would say there's lots of times that we can get people pre-approved, but the biggest hurdle is the down payment and closing costs. And, there are solutions. There's borrowed down payment and stuff like that. But, I think one of the biggest challenges are really qualifying for enough mortgage to buy the house you want. I heard a stat the other day that the average house price in HRM is above $400,000. So, if you're trying to do a pre-approval for a purchase of $200,000 or $250,000, you best be looking out in the countryside, because you're not going to find anything otherwise. Yeah. And we would really be maybe getting your hopes up with a pre-approval when you can't even find something to buy. And that's where it's very challenging right now. I think we're in a little bit of a situation for some first-time home buyers that it may be a buy now or buy never, because as the price increases, it's going to become less and less, achievable for some of them.
How much would just roughly a $400,000 mortgage biweekly payment be on that? Can you do some math in your head?
I would say probably with property taxes, you're talking about a couple grand a month in terms of like what the payments would look like.
$2,000 a month.
Yeah.
What type of income would somebody need to
qualify?
And now I get it that there's debt and other things that come into play.
I will
here.
tell you what the rule of thumb is, Todd.
Yeah.
It's you can qualify for 4 times your income. That's kind of the rule of thumb.
Oh, is that right?
So if you make $100,000 a year as a household income, you could qualify for a $400,000 mortgage.
Right. Yeah. Okay. So generally, you're going to have some people, because $100,000, you've got a lot of those people working in government and the Sunshine List, we know, and whatever.
Mm-hmm. Or there's 2 borrowers that make $50,000
but
each.
generally, I'm thinking you're going to have a couple, 2 teachers, something like that.
There's a lot of the transactions that are happening today have 2 borrowers. Yeah. It's just to the cost of real estate. If you don't have the income to support it, you need a second borrower. That's just reality. Yeah. I'm also seeing a lot of borrowers coming up with huge down payments, which was not the norm a couple years ago. We're seeing clients coming in with very large down payments and putting down even much more than even 20% down. Sometimes they're putting 30, 35, 50% down. How old are these people usually? And sometimes they're young people sometimes. Yeah. So I think that there's some family gifts obviously happening. And if someone really wants to get into the housing market and maybe they can afford a certain amount of mortgage, and if you can't afford more, you have no choice but to make up the rest of it in a down payment.
Now, $2,000 seems like a lot of money, but if you're renting a 3-bedroom apartment, you're spending that probably anyway, right?
And we are live here from downtown Halifax, and we're actually right over by Queen's Mark, which is a new apartment hotel complex in downtown Halifax. And I saw a poster that a 2-bedroom apartment there starts at $3,000.
Exactly.
So, you know what? To be able to afford even that type of rent, I think certainly it needs to be over 6 figures in the household to be able to really swing it.
Do you have concerns, though, and we kind of talked about this earlier in the show, but do you have concerns for the person making $60,000, $65,000 a year single? They're out of the market now. I mean, that's a lot of people, and I don't know that's a good spot to be.
I don't know if it's a good place to be either. And I think the house prices did increase, but I'm not sure that people's income now have increased as much. If anything, some people took a bit of an income hit over the last couple of years because of COVID and economic challenges and such. So I think it's going to be an interesting time. You know, another article that I read, you know, just a couple of weeks ago was that when we're through this COVID winter, we'll call it, we are going to be like the roaring 20s or roaring 30s. You know,
it was the 20s.
It was
the
the 20s,
Depression was in the 30s.
That was not a good time. So like the roaring 20s. And, you know, that's going to be interesting, I think.
Yeah, I don't know that that's, I mean, people say that, but I guess what I'm getting at is that I do, there was for a very long time, you could get by on $50,000-$60,000, live that dream as you call it, and get a house if you if you did things right, kept your debt low,
low debt,
right,
a decent down
and
payment.
and I think that's an era that we're losing, and I think that
I think
there's
in
a loss
Halifax,
to that.
I think in Halifax, it's not possible
It's not
anymore.
possible. Yeah.
If you want to buy maybe a house in Windsor, or if you want to go to Truro, maybe, but those markets are really booming as well.
Yeah.
So I don't know. I don't think it's possible to buy a house for 200 or 250,000. They're very few and far between for the ones that are available. And I think if you're looking at real estate even in that price point, it probably needs a lot of work. So unless you work in the industry in terms of construction, you're probably biting off more than you can chew unless you have a good amount of cash to be able to really improve that real estate over time.
Yeah, and in the next segment, I do want to talk to you about renovations and all of that, because there's a lot of layers to that.
Mm-hmm.
But lumber prices and material prices, they're going through the roof as well. I've seen exponential growth, 70+% in for lumber. I mean, that is hard to bear.
That is hard to bear, and I think some builders are not bearing it, to be honest. I think some builders are having a very, very hard time right now. You know, I'm seeing some purchases of new construction turnkey homes getting delayed and delayed and delayed. And I'm dealing with...
You mean from the beginning of them?
Yeah, for possession.
Right.
So we're dealing with a couple situations now that the builder basically has asked the buyer to terminate the agreement.
Wow.
Because of the cost to complete the home is just in excess of what what they're selling it for. So they have to basically complete the project at a loss. Yeah. So they said, you know what? We will let you out of the contract, give you your deposit back, and call it a day. And, you know, it's scary times, and we can talk a little bit about that more on the next segment.
Yeah, I want to definitely get more into that. So let's do that, and all the complexities of lending for renovations and all that. Sound fair?
Sounds great.
Excellent. So it is Mortgage 101 with Clinton Wilkins, your guide to home ownership, and myself, Todd Veinotte, right here on News 95.7, and we'll be back with all of that.